Picture this. It's June 18th, 1815. The fate of Europe hangs in the balance at Waterloo. Napoleon faces Wellington in what could be his final battle. But 200 miles away in London, one man is about to turn the outcome of this battle into the greatest financial coup in history. His secret weapon? Not gold, not armies, not political connections. Carrier pigeons. The Rothschild family didn't become the most powerful banking dynasty in Europe by accident. While their competitors relied on official government channels and slow mail coaches for information, the Rothschilds built something revolutionary: the fastest private intelligence network the world had ever seen. And at the heart of this network were birds that could fly faster than any horse, carry messages across borders without passports, and deliver market-moving information days before anyone else received it. This is the story of how information became the ultimate currency, and how one family's mastery of communication technology allowed them to reshape the financial world. It's also a story that will sound remarkably familiar to anyone following modern markets, where milliseconds matter and data is power. Let's start with Mayer Amschel Rothschild, the family patriarch who established banks in Frankfurt around 1760. Mayer had 5 sons, and in a move that would define global banking, he sent each one to establish operations in a different European capital. Nathan to London, Karl to Naples, James to Paris, Solomon to Vienna, and Amschel stayed in Frankfurt. This wasn't just business expansion, it was the creation of a communication network that spanned a continent. But here's what made the Rothschilds different from every other banking family of their era. They understood that in finance, timing isn't everything, it's the only thing. Government bonds could swing wildly based on political news. Wars could bankrupt nations or make them wealthy. Trade routes could shift overnight based on political alliances. The family that knew first would profit most. So the Rothschilds invested heavily in speed. While official government dispatches traveled by horse-drawn coaches along established postal routes, the Rothschild network used everything available: fast ships, relay riders, and yes, carrier pigeons. These weren't just backup communication methods, they were carefully orchestrated systems designed to move information faster than anyone else could manage. Carrier pigeons were particularly brilliant for financial intelligence. They could fly at speeds up to 60 miles per hour, travel 500 miles in a single day, and navigate directly to their destination without following roads or stopping at borders. They were essentially biological telegraph wires, decades before the telegraph was invented. The Rothschilds maintained pigeon lofts across Europe, breeding and training birds specifically for financial intelligence. But the pigeons were just one part of a larger system. The family developed coded messages that could compress complex market information into short dispatches. They stationed agents at key ports, battlefields, and government buildings. They cultivated relationships with ship captains, postal workers, and anyone else who might provide advance warning of market-moving events. This brings us to Waterloo and the story that made Nathan Rothschild legendary among financial speculators. On June 18, 1815, as Napoleon and Wellington faced off in Belgium, Nathan Rothschild was in London, running his banking operations and watching government bond prices fluctuate based on rumors and speculation about the battle's outcome. The stakes couldn't have been higher. If Napoleon won, the fragile coalition of European powers would likely collapse. Government bonds from Britain, Prussia, and other allies would become worthless paper. But if Wellington won, those same bonds would surge in value as investors rushed to buy the debt of victorious nations. According to financial legend, Rothschild received news of Wellington's victory through his private network, specifically a carrier pigeon, a full day before the official government messenger reached London. While the British government was still waiting to learn the fate of their army, Nathan Rothschild knew that Napoleon was defeated and that British government bonds were about to become incredibly valuable. But instead of immediately buying bonds, Rothschild did something counterintuitive and brilliant. He began selling. Heavily. His traders dumped British government bonds onto the market, creating panic among other investors. If Nathan Rothschild was selling British bonds, they reasoned, he must know something terrible about the battle. The selling intensified, and bond prices crashed. Then, when prices had fallen far enough, Rothschild's agents quietly began buying. They purchased massive quantities of British bonds at deeply discounted prices. When the official news of Wellington's victory finally reached London the next day, bond prices soared, and the Rothschild family had made what some historians estimate was the equivalent of hundreds of millions of dollars in modern money. Now, it's important to note that some historians debate the exact details of this story. The specifics about carrier pigeons might be embellished, and the timeline might be compressed. But what's undisputed is that the Rothschilds consistently profited from superior information speed, and the Waterloo trade, whether it happened exactly as legend tells it or not, perfectly illustrates their strategy. This wasn't insider trading as we understand it today, because the concept didn't exist yet. There were no securities laws, no regulations about material information, no restrictions on using private intelligence networks for financial gain. The Rothschilds were playing by the rules of their time, which essentially had no rules beyond, don't commit fraud. But the ethical questions this raises are timeless. When information asymmetry is this extreme, are markets really fair? If one family can consistently know crucial information days before everyone else, are they creating value or just extracting it from less informed investors? These same questions echo through modern financial markets every day. The Rothschild information advantage didn't end with Waterloo. Throughout the 19th century, they continued to invest in communication speed. When the telegraph was invented, they were among the first to use it for financial purposes. When underwater cables connected continents, the Rothschilds ensured they had priority access. When news agencies developed, the Rothschilds cultivated relationships with reporters and editors. They also understood that information wasn't just about speed, it was about interpretation. The Rothschilds didn't just want to know what happened first, they wanted to understand what it meant for markets before anyone else figured it out. They hired analysts, cultivated government sources, and developed sophisticated models for predicting how political events would affect financial markets. This combination of speed and analysis made them incredibly powerful. During the 1840s railway boom, the Rothschilds financed railroad construction across Europe, partly because they understood how rail networks would transform commerce and communication. During various European wars and revolutions, they often knew which governments would survive and which would fall, allowing them to buy and sell government bonds accordingly. The parallels to modern financial markets are striking. Today's high-frequency trading firms spend millions of dollars to reduce the time it takes to execute trades by microseconds. They build fiber optic cables along the most direct routes between major exchanges, use microwave towers to transmit data faster than underground cables, and even employ ex-military satellite technology to gain speed advantages. Modern technology companies like Google, Facebook, and Amazon have built their empires partly on information advantages. They know what people search for, what they buy, what they share, and what they want before traditional companies do. This data advantage allows them to dominate advertising markets, predict consumer trends, and enter new markets with better information than their competitors. But unlike the Rothschilds' 19th century operations, modern information advantages operate within extensive regulatory frameworks. Insider trading laws prohibit using material, non-public information for securities trading. Market makers and high-frequency traders face regulations about fair access and market manipulation. Technology companies face increasing scrutiny about how they collect and use personal data. The regulatory response has evolved significantly since the Rothschilds' heyday. Securities laws now require public disclosure of material information. Exchanges have rules about fair access to market data. Insider trading can result in prison sentences. But the fundamental dynamic remains. Information advantage creates financial power, and financial power creates the ability to maintain information advantages. Consider how modern investment banks operate. They employ armies of analysts to process public information faster than competitors. They maintain extensive networks of industry contacts. They use satellite imagery to track economic activity, analyze credit card spending patterns to predict earnings, and employ artificial intelligence to process news and social media for market-moving information. The difference is that today's information advantages are often about processing public information more effectively rather than accessing private information more quickly. When Renaissance Technologies uses mathematical models to identify market inefficiencies, they're not relying on secret news. They're finding patterns in public data that others miss. When Bridgewater uses economic analysis to predict policy changes, they're interpreting public information better than their competitors. But the ethical questions persist. In a world where information processing capability varies enormously between large institutions and individual investors, how fair are financial markets? When algorithmic trading firms can process Federal Reserve announcements and execute trades in milliseconds, while individual investors need minutes or hours to understand the same information, who really benefits from market movements? The Rothschild legacy also raises questions about concentration of power. By the late 19th century, the family's information network and financial resources made them influential in European politics. Governments consulted them about financial policy. Their lending decisions could affect national economies. Their support or opposition could influence whether governments could finance wars or public works projects. Today's information-based financial giants wield similar influence. When credit rating agencies like Moody's or Standard & Poor's change a country's rating, it can affect that nation's borrowing costs more than political elections do. When algorithmic trading firms dominate market liquidity, their behavior during crises can determine whether markets crash or stabilize. When technology companies control access to financial data and trading platforms, they shape how entire economies function. The Rothschild model ultimately transformed from relying on information speed to becoming part of the information infrastructure itself. As official communication networks improved and information advantages from speed decreased, the family evolved into providing financial analysis, government advisory services, and market-making functions. They became less about knowing first and more about understanding better. This evolution mirrors what we see in modern markets. As information becomes more democratized through the internet and regulatory disclosure requirements, competitive advantages shift from access to analysis. The winners are often those who can process vast amounts of public information more effectively, rather than those who can access private information more quickly. But perhaps the most important lesson from the Rothschild carrier pigeon network is about the relationship between technology and financial power. Every major advance in communication technology creates opportunities for financial advantage. The telegraph, telephone, radio, television, computers, and internet have all created new forms of information asymmetry and new opportunities for those who adopt them first. Today, we're seeing this pattern repeat with artificial intelligence, quantum computing, and blockchain technology. Financial firms are investing billions in these technologies, partly because they believe they'll create new information advantages. The firms that can use AI to analyze markets more effectively, quantum computing to solve complex trading problems, or blockchain to access new forms of financial data may become the Rothschilds of the 21st century. The story of the Rothschild carrier pigeons reminds us that financial markets have never been just about money. They've always been about information. The family that could get crucial news from Waterloo to London first could profit enormously. The firm that can process Federal Reserve announcements microseconds faster today can do the same. But it also reminds us that information advantages, while powerful, aren't permanent. The Rothschilds' pigeon network became obsolete when the telegraph arrived. Telegraph advantages disappeared when telephones spread. Early internet advantages faded as access democratized. Today's AI and high-frequency trading advantages will eventually be matched by competitors or regulated by governments. The constant in financial markets isn't any particular information advantage. It's the ongoing competition to develop new ones. The Rothschilds understood this, which is why they remained powerful long after their pigeons became obsolete. They adapted their information strategy to each new technological era. As we face our own era of technological change, the Rothschild legacy offers both inspiration and caution. Information advantages can create enormous wealth and influence, but they also raise fundamental questions about fairness, market integrity, and concentration of power. The same technologies that promise to democratize access to information also create new forms of asymmetry. The carrier pigeons are long gone, but the game they enabled continues. In financial markets, information will always fly toward those who can use it most profitably, and the future will belong to those who can build the fastest, smartest networks to catch it.